Hello friends, thank you for joining me. We hope to cover the US dollar pairs along with the dollar index and general market, and the plan would be is for us to try and get a bigger picture, right, so that we are able to carry out analysis on a shorter time frame in order to plan for actual trades. And as I go through, I hope I will present to you quite a compelling case that the market is at a point where we could potentially get quite a sizable trend change. And whilst I will do my best to present this case with the various specimen examples, etc., you do please accept that this is educational material, and therefore you must also do your own due diligence before you decide to use this or action upon it, and do so at your own discretion. So with that matter taken note of, this is the chart as you see, which is basically a chart I have presented to you and also gone through it myself with a view of carrying out correlation between different markets. So at the top we see Euro USD, and it's a weekly chart, and then in the middle we see dollar index, and then at the bottom we see S&P 500. I could have chosen another equity index, but they broadly all showing the same thing. The point very quickly to note is that generally speaking, between the Euro USD and the dollar index, we should have negative correlation, very close, very high, but negative correlation. So in other words, when the Euro USD is coming down, you expect dollar index to be going up, which is basically what we see in here. And one of the reasons for that is that almost 68-70% of the weighting of the dollar index is made up by Euro USD. And then at the bottom you see the S&P 500. Now the S&P 500, I'm using this because sometimes there are certain segment of these moves much more clearer on S&P 500 than perhaps either on a euro or on dollar index. And as you go through, you will note that there are occasions where the dollar index is going up, S&P 500 coming down. Now you would expect that because S&P 500 index, the constituents part of that index is actually measured in dollars. So whatever stock index, stock shares you have, they are measured in dollars. So you would expect if the dollar is getting strong, then the value, nominal value of those particular assets would decline. So in this sense, we see the index falling when the dollar index is going up. Then there are times when the dollar index is coming down, equity index going up. So generally that's the relationship, but there are some segments, for example, segments that I've marked here, some segments where you see both of them going up together for short period. And in particular from here, which is basically February of this year, we have been going up on the equity index and we have been going up on the dollar index. You see, like, if you pick certain segments here, like here, we got dollar index going up and the equity index coming down. Then dollar index going sideways and is falling and the equity is going up. Basically, that's a normal relationship you would expect between dollar index and the equity. But here, from February, we have broadly speaking on equity gone up and we have gone up on the dollar index. And correspondingly, we've had Euro USD come down since the high of February. So that's interesting. And the question now arises is how long will this relationship between the dollar index and equity continue? My suggestion is that it does not continue for a very extended period of time. For example, over here you see equity index rising, dollar index falling, but then there was a short period here when basically both of them were falling together. and then they snap back to the normal relationship, which is the negative correlation. So I think we are in a period here where we are currently positively correlated, but there would come a time when the equity index and dollar index will go back to their normal relationship. But how far will they continue? That's difficult to tell. But this is interesting because whilst we are in the sync, the dollar index and equity index moving together, we have reached an area of quite a noticeable resistance on the equity index. We will look at the equity index a little bit more in detail to see exactly where we are. But then also on a dollar index, we have an area where previously there have been a lot of occasions when the market either spiked onto that area or have had resistance expressed, like over here, and we've basically come back into that area, and we've potentially hit a resistance. And we will go into the dollar index as well in a bit more detail to identify that this actually now is end of the move. So we have this minor trend line up, and we've run right against it underneath that. So here we touched it once, we've come down, we touched it a second time, and chances are now that we would actually decline. So if the dollar index decline and the equity market decline, then that would suggest euro to go up. Okay, so with that basic concept, we will go into the dollar index chart in a bit more detail. So this is the dollar index chart, and in fact let me just show you the other one with a bit more longer time frame on it. So this is the dollar index chart, and if you have seen any of my previous recordings, you will know that I am expecting from this decline here, I am expecting that we would have this area potentially as a wave 4 in Elliott wave 4. So we've got this here as the wave 2, this one as wave 3, then this triangle is a wave 4, and it will resolve to the downside. And there is a lot of confusion because this has been going on for some time, and there are a lot of countermanding moves, so there would be degree of debates as to exactly where the triangle forms. Does the triangle form where I have this brown trend line on the top and the brown at the bottom, or does it form where I have now shown with this modified, where I've got a blue line here? So in other words, the brown at the top and the blue at the bottom. Where does it actually produce the triangle? So if this was wave 2, so in other words, we have come down, as you can see, we've come down from there, gone up. So this was bottom of wave 1, wave 2 here in 2000. Then we've come down here as a wave 3. This is wave 4, and we'll be coming down for wave 5. So if that is likely to take place, then eventually when we resolve out of this triangle, my general projection for the dollar index is somewhere in the region of, for example, if we draw a trend line here, and you will note that this is also like a falling wedge pattern. In other words, we've had a wave 1 come down, wave 2 up, 3 down, congestion 4, and will drop down for completing wave 5. So if that holds, then potentially we are expecting dollar index to drop to somewhere about 68 area. Maybe if it doesn't come all the way there and it does just a minor breach of this last low, then we may get a truncated wave, as it were, or ideally a wave that just takes out a low on there and find support, bounces off. Then even then we are expecting it to probably go in the area of 70. So between 70 to 68 is potentially where I'm expecting dollar index to go. So now if we were to look at that in a bit more detail, then look at the RSI, and I am showing this as a triangle on RSI. Sometimes on the price, it is difficult to know exactly where to draw the line when you got so many different swings in there. But you can see on the RSI is quite clear. What I've done on the RSI on a weekly time frame, which is standard 14 period RSI, is I've connected the very low, which was part of this wave 3 down, and then you connect this subsequent higher lows, so it actually gives you that triangle. So then I think, as you see here, if that was wave 3, where we are saying here is wave 3, if that was wave 3, then this is A, as you can see on here, wave A on the price. Then we've got A, B and C to give us wave B. Okay, this one is wave C. Again we've got A, B and C. So if that is wave C, this one is D, and again we have, when we look at it a bit more closely, you'll see that leg has A, B, C. So it basically, triangle is 3 moves each. So you got A, B, C going up, A, B, C going up here, wave A. Then you got A, B and C down as a wave B. Then you got A, B and C to up as a wave C. So this one would be C, this one would be E, D rather, and this one would be E. So if I just quickly put those numbers on, so we're saying that that starts off from there, which is where we are looking for wave 3 low. Then this one we are suggesting is a wave A. This here as a B. This one as wave C. This one as a wave D. And then this currently now just completing is wave E. And from that concept, I think the ABCDE triangle, contracting triangle, where you have 3 swings each. So in Elliott wave you get 3 ABC up for wave A, 3 ABC down, 3 swings for wave B, A, B and C up, 3 swings for wave C, A, B and C down, 3 swings for D, and then you got A, B and C up, 3 swings for E. So three swings in each of them, and I think that's basically now finished, complete. So just keep that in mind while we look at the dollar index in a bit more detail. So this is the dollar index we've been following. So this is where I was talking about 3 swings, is A, B and C. Okay, ignore this one here. So it's A, B and C. So then again, this is from the high of July 2000 and July 2012. So we had wave A, wave B and wave C is a 3 swing, and then we got a final wave A, wave B and wave C, which now completes a larger triangular with a wave E truncating there. And this area here, as you see on a schematic diagram, we're expecting, if this was a flat correction, which what I think it is, so we've got like, retracement is quite deep, almost like 90% retracement. So we got A, B and C, which this one follows in the first part to give us wave A in bracket, A, B and C down to give us wave B in bracket, which is here, A, B and C, and then in that case wave C normally has 5 waves. So this one on a schematic diagram suggesting 5 waves, and here we do have 5 waves, and let me show you how I have marked them. So we've got wave 1 here in green, 2 down, and then all of this here is wave 3, this one is 4, and this final one is 5 with an ending diagonal. And in ending diagonal, which is almost like the one we just looked at, contracting triangle sort of thing, where you got 3 swings each. You got A, B, C for A, B, C down for B, A, B, C up for D, A, B, C down for A, B, C as wave A, B, C, D, E. So each of those legs have 3 swings each. So we finished the wave 5, and that also finished the 5-wave cycle here. So on a larger scale, where we noted on this chart that we were basically looking for A, B, C, D and E, and that's where we are now. And I think we are just completing that E, and in which case we should start off the new leg. That's the concept, that if the wave 4 is now complete and if our analysis holds, then we should see a new leg to the downside, and that new leg to the downside is likely to be quite a strong, powerful leg, because it will be 5-wave move to the downside, and that's an impulsive 5-wave move to the downside. And we see this sort of shown in several other US dollar pairs. So let me now take you to the US dollar pairs first. Oh, before we go into that, let me just explain to you about the equity index. So this is the Dow Jones Industrial 30, and you can see that we've started off from the low back in 2009, and so far we've gone up in a parallel trend channel to the upside. And whilst there are several different propositions by different analysts in labeling these, I am labeling them in the way that I have, which, because it's not an impulsive wave up. Many call this one 1, 2, 3, 4 and 5, which is not really true. Technically it's not true. You could get away by that because it does look like a 5 swing, but it does not hold to normal guidelines. For example, wave, this final top has the highest momentum, so generally you don't expect that. And also, if you did a test about the wave 3 should go beyond the territory of wave 1. So if you were to draw a trend line like that, you see it cuts across, and it actually barely goes up. It doesn't go as far up as the wave 1 would. So I am labeling them as W, X, Y, X, Z to give us the larger wave A. Then we got ABC back as the wave B, and then similarly we've got again a similar sort of thing. We got W, X, and then you could double zigzag. So W, X, Y, X, Z. Okay, so W here, X, Y, X, Z. So that gives us wave C. So we got wave A, wave B, and wave C. And then see, this one I've marked as an X because the momentum on the indicator drops well below the origin of the move up from March 2009. You see over here, if you look at the RSI on there, it's just around 26, 27. But see, this RSI has fallen well below that, so I'm calling that wave X. So it's a wave X, which is a connective wave for a second cycle of sequence. So we will get something like this. We got A, B, C, X. So you should get another A, B, C to the upside. And exactly where we are on that now, if you look at this from the X, I think we have wave A, and which is W, X, Y, X, Z, just like the other one, wave A. Then we've got wave B, and we are now doing wave C. And in the wave C, I suspect we've got the look of 5 waves. So this initially is like a leading diagonal wave 1, wave 2, currently just finishing wave 3. So we are now expecting a pullback in equity for wave 4, and then final leg up for wave 5. So I think while the market pulls back, during that time dollar index will go down with it. When the market then departs from it to go back up, at that stage the dollar index will continue down, whereas the equity market will continue up. So that's probably where they are going to snap back to their normal negative correlation. But at the moment they continue, and therefore if you look at this part here, then from this low we've got W, X, Y, X, Z to give us wave A, wave B, and then you can see this one is a leading diagonal wave 1, A, B, C, so give us wave 2. Then we got 1, 2, 3, 4 and 5 in bracket, Roman numeral parenthesis. So that completes to wave 3. So I'm expecting ABC retracement for wave 4, or possibly a triangle kind of a fashion, congestion for wave 4, and then final leg 5, and that would simply give us this A, B and C, and that would become a larger wave A like we had over here, larger wave A. Okay, from where we will expect a much deeper pullback. So at the moment I'm expecting this one to complete wave 5 after a short pullback, and the pullback I'm expecting is probably likely to be because of the structural support and this previous wave 4. So somewhere in the region of 13,700 approximately, where I'm expecting a pullback, and we've got this rising trend channel. So providing that trend channel holds, then we will expect a wave 5 to complete the 5-wave cycle here. Okay, so for the time being, what we noted on our other chart is that the dollar index and equity are both moving together. So if this is now coming down, then we suggest that the dollar index is also likely to find a resistance and will start moving down. And in fact, it has, as we know from this chart, that we finished the 5-wave move up and we've started moving down. So this is likely to be strong and powerful. In the early days, it will be difficult for anybody to know quite clearly whether this is a new impulsive wave or not, because our analysis suggests that we've finished a 5-wave. We are now in anticipation of that being confirmed by strong move of dollar index to the downside, and that would confirm that we have completed this 5-wave, and we are now not simply just coming back for a retracement and then continue higher, but we will actually now start developing new cycles of 5-wave to the downside. So we will need, that's our expectation, but we would need some confirmation in order to identify that that new trend has actually begun. And secondly, we would not expect dollar index to show, this kind of move. This is like an exhaustion of the move. So if it's a new move starting with a new impulsive leg, it will be very clear, very distinct and very powerful. That would be our initial confirmation that we do have an impulsive leg to the downside. Okay, our invalidation point would be is if we had ABC down here and we start running up. That would be our invalidation of overall count, which suggests that we should now start having new 5-wave decline to the downside. And in terms of the level, dollar index has topped at the correct level, because it's a retracement of this leg down is 78%, 88% in fact retracement. Secondly, if you project the wave A from wave B, then we have 161%. Yeah, 161%. So we have a confluence there as well, and you can see that on Thursday of last week we had that spike into it to complete that. So I think the dollar index has completed its 5-wave cycle to the upside and is now in a major new trend to the downside, and that would suggest that there would be significant change in trend to many of the US dollar pairs. So after having looked at the equity index, the oil index is also having its own triangle, as you can see. And so far there could be a triangle which has this lower trend line coming in. It's on a weekly chart. So I think we've got here is WX. We are expecting wave A. So here we had A, B and C to give us wave W, X connecting wave. Then we are expecting wave A, triangular wave B, and we're expecting wave C to go up to complete this cycle. So we'll finish it with W, X, Y. Okay, and then the oil will start coming down. But in the meantime, oil has a long way to go. But whilst it's in congestion, again the question arises is, will it be this larger triangle or will it be the one with internal smaller triangle? And again, it's a little difficult to tell which one is likely to be, but based on the RSI on a weekly chart, we could do a trend line here, for example, not a clean one like so, and we could possibly also do a trend line on the bottom. You can see now that that is near complete. But if we get a breakdown, on the RSI below that trend line, then the price will come down to the lower red line, so it will have a larger triangle. Okay, but if the price holds approximately where it is now and start making run up, then that triangle is complete and the oil will start going higher. If it's not this smaller triangle, then we may have, as I say, a drop down to lower level like 81 area somewhere, where we will finish this triangular movement, which is wave A in bracket, B in bracket, C in bracket, D in bracket, and possibly E finishing here, or we might get E coming down here. So either way, we're expecting either dollar to find oil to find support here and start moving to the upside, or we will expect oil to fall to 81 area somewhere before going higher again. So all of that is suggesting that there is likely to be more room for the equity market to go up, because there is normally relatively close correlation between equity market and oil index. So if the oil is coming down, then the equity will be coming down. If the oil is going up or equity is going up, then oil will be going up. So generally they go together, and sometimes there is a lag, sometimes there is one instrument leading the other, another following, but generally speaking they go together. So we are expecting oil either to find a support around 91 area and start moving up, or fall down to 81 area before going up, and we'll know that fairly soon which of the two it is. My personal feeling is that because we're expecting equity index to fall to something like 17,300 on Dow Jones, then that would suggest that the oil is going to come down to lower level here. It's 81 area, and then they will have completed their correction, and then the oil will start going up and the equity market will start going up also. Okay, and during that time we would expect dollar index to continue declining. That's another evidence to suggest that if the equity market corrected and oil corrected to this level, and then the oil begins to make another leg up and the equity market goes up, then the normal relationship between equity and dollar will revert, and we will find that they then start moving to the downside. So the dollar index will have a new impulsive leg to the downside that we discussed. So let me now with I think that is all really. I mean, any equity index you look at, you know, whether it's Nasdaq, they're all suggesting potential top and another leg to the downside right now at this moment in time. S&P 500 exactly the same, topping up now and expecting a correction back to this rising trendline support, and then moving further up to complete that particular the sequence, but suggesting further upside on that. So we'll go into the US dollar pairs. So the first thing we are going to look at a US dollar Swiss, and this chart is looking very busy, but basically I'm expecting the Swiss, we had like a triangular shape here and we fell, and in this process of falling, I think what we've got so far quite likely is that this should be the end, but I don't think it is. And I think what is at play is this here, which many people have learned it as a triangle, and I'm inclined to do the same. So from my perspective, I think what we've got is we've got a wave 1 down, we've got a 1, 2, and this is 3, and this one has come back into the territory of 1, which is not a brilliant idea, not a good one really. And for that reason, many people are thinking that if this out of the triangle we've got to leg down to complete this down wave, then this now is in a big major up wave. I don't seem to agree with that. Let me just, you see, the way I've done on here is I think we've got wave X here, wave A, B, C as the wave B, and we are coming down in a wave C. And in a wave C, I think if you look at it, is going to be made up of two parts. One part is A, B, C to give us a mid-cycle wave A, B, C back to give us mid-cycle wave B, and we are now going to go into mid-cycle wave C to the downside. Okay, now that wave C to the downside would probably be 5-wave decline. Normally you expect when you get wave A with a zigzag, wave B with a zigzag, you often expect wave C with a 5-wave impulse. So that 5-wave impulse would coincide with the dollar index having a 5-wave impulse to the downside. And I think the dollar Swiss so far has probably completed a wave. As you can see here, it has completed what I think is the minor 1, minor 2, minor 3, minor 4 and minor 5. That will complete a larger cycle, wave 1. We'll do a retracement and then we'll continue further down. So just looking at the shorter term then on the 4-hour chart is that the wave count is somewhat different from the dollar index, but this one's got like A, B and C with a rising wedge. So that's A, B and C to give us wave A in bracket, wave B in bracket, and then wave C. So that gave us W, X, and then Y, X and Z. And then we had an expanding diagonal, so we go A, B and C to give us a wave B. So this one here formed triple zigzag to give us wave A in bracket, double bracket, wave B in double bracket, and then that was the wave C in double bracket. And so that one now completes this current retracement to the upside, and we are now on our way down. I think we've got a leading diagonal as wave 1 in bracket, parenthesis Roman numeral 1, and then we've got a Roman numeral 2 as a bracket, and we are now in a Roman numeral 3 with a minor 1, 2, 3, 4 and 5, and we do expect that whilst there will be a small retracement when the market opens later on, we would generally speaking continue to the downside. So here for example we might do a retracement, but then continue down to complete this wave 5. Then that would create a wave 3 in bracket, retracement, and then continue. So basically staircasing down now with a new 5-wave decline starting off from here. Okay, so US dollar Swiss suggests that there is a dollar index is now going to go into a fairly strong downtrend. The other currency we'll look at is the Aussie dollar, and like Aussie dollar, like some of the other currency pairs, are also in some sort of a triangle, and it's a question of how that triangle is going to be resolved. So I've played with this many times, but basically we are in a triangle. So we had a 5-wave move up, so 1, 2, 3, 4 and 5 to give us wave A. Then I think this is part of a wave B, and so it's a triangle, and which will resolve to the upside. So in the current process, we could say, ignore the labels now, but we could say that after that capital wave A is done, we got A, B, C, D, and we are coming down to form a wave E. Then we should start going up. So in that process, it's a question of whether we are going to come up to the midway or all the way down here. Okay, because the wave E could have finished here, because this one I'm suggesting is the wave D, but it's quite possible that we could actually have, instead of this larger line, we could actually have this shorter one. Okay, just this is exactly similar sort of thing to the oil. Oil, we had a smaller triangle and potentially a larger triangle. So if this smaller triangle holds, then it's quite possible that the Aussie dollar could come down to this sort of level, like 1.02 area, to complete the triangle and then push off. Or we would probably come all the way down to this lower rising trend line to complete a larger diagonal, larger triangle, and in which case Aussie dollar could fall to about 0.98. Right? So out of the two, I'm not sure which of the two will actually follow, but my reasoning suggests that here we have risen A, B, C up to give us wave A, then we've got wave B, and then this here is a wave C. So when you look at that, we've come down probably in a 5-wave down to form a wave A. So this is B, so we should get at least a similar sort of move to the downside. Okay, so it's A equal AB equals CD, right? So if you, for example, we measure this one and say that is wave A, and say if we get the same AB equals CD, you can see this one AB equals CD would project that to a region of around parity. So it's quite possible that we would actually not stop here where I've drawn this red line. It won't stop there, but instead it will probably go down to parity or right up to the trend line. Okay, so that's basically Aussie dollar is going to be declining. So we would have a situation where, for example, dollar index is declining, so that is a US dollar getting weak, and in that scenario Aussie dollar weakening against US dollar means that the Aussie dollar is going to be very weak. So looking at it basically from this chart and the concept of Elliott wave projecting the Aussie dollar to around parity, and then after that Aussie dollar will start going up against the US dollar, but in the meantime they'll probably be going both together. And the other thing that you can note is many times, I don't have the chart here, but many times people have commented about close correlation, positive correlation between Aussie dollar and equity index. So if the equity index is currently in a process of declining, then we can anticipate that the Aussie dollar will probably also come down with it. So from that perspective, to me, it makes sense. However, what that means is that the Aussie dollar is going to be weak for a short while against the US dollar, and therefore it will be one of the weaker currency from the major group. And same situation can be observed from New Zealand dollar. The New Zealand dollar is a little bit more stronger than the Aussie dollar, so that one has come up from the low here in 2009. It's done what appears to be wave A, wave B and wave C, or it could be A, B, and then we've got A, B and C, and this one is a part of a triangle. So again, question arises is whether we get this smaller triangle doing the job that we need to, and therefore we will finish up with three waves, three swings each. So here we have possibly like, well, this coming down look to me more like a 5-wave down, but we could even say that it is a B and C, so 3 swings, A, B and C 3 swings, then we got A, B and C 3 swings again, and we've gone up in an ending diagonal. So this one is not exactly the normal triangle we look at. I think what we've got here is potentially wave A, then we got A, B and C as wave B, and we're going to be coming down in wave C. So I expect, just like the Aussie dollar, that the New Zealand dollar is going to be forming a move to the downside, which is likely to be 5 waves, and it may come down as much as what I'm suggesting here, or it might come down to this level, which is previously a structure of resistance, support, so maybe coming to about 74.50 area. So if it doesn't come to 74.50, or rather if it breaks below 74.50, then we could go, quite low down here. If we did AB equals CD, then that would suggest a target to around 71, 72 area. Okay, because I projected that swing. In fact, if I was to do that here, then you can see that it's actually 100% comes in at this level here, around 70 area. But we'll have to wait and see which of the two actually plays out, and it's quite possible that we might even have this scenario, is triangle formed over here, in which case we may find that this one comes and stops short, where I've suggested this square here could stop short and then possibly move up. But New Zealand dollar is likely to be weakening from here, so in a sense both Aussie dollar is a sell, New Zealand dollar is a sell against the US dollar, and we're expecting both of them to decline quite noticeably. I mean, you're talking about this one about 600-700 pips, but probably more like 1,000 pip if it falls below here, more like 1,000 pip, New Zealand dollar and Aussie dollar. So when you start looking for pairing of these currencies, that means Aussie dollar and New Zealand dollar are going to be weaker of the group of currencies representing the resource currencies like Canadian, New Zealand and Aussie. Aussie and New Zealand are going to be weaker. Aussie might be even more weaker than New Zealand dollar in that particular process. Then the other one we need to look at as the resource currency is Canadian dollar. Now the Canadian dollar, likewise, like the dollar Swiss, is we've moved down in what I think is a wave, 5-wave move to the downside. As this one here from September high, we've got wave 1, wave 2, wave 3, wave 4 and wave 5. We moved back in A, B and C to the upside, but C to the upside is not finished yet. So just like the Aussie dollar and New Zealand dollar are going to be weaker against the US dollar, Canadian dollar too will be weaker against the US dollar. And it has a bit more to go. And that to me suggests that when we were looking at the oil is going to drop down to about 81, because Canadian dollar and oil also have a relatively high correlations. So if the oil is falling in price, then that would mean Canadian dollar is going to be weaker. So that one still got to finish this fifth leg up, because so far we got this one, A, B and C, and wave C's got 5 wave, 1, 2, 3, 4 and 5. So I would not short the Canadian dollar against the US dollar, going short meaning, you know, shorting the US dollar, but rather stay out until we get a top, and at that stage we would be looking to short the US dollar against the Canadian to the downside. Okay, so Aussie dollar, New Zealand dollar and the Canadian dollar are all going to be weaker against the US dollar for a short period, and during that time we will also be expecting equity market to be declining or retracing, and then the US dollar will continue declining, and then the Canadian will start strengthening, Aussie will start strengthening and New Zealand start strengthening. But in the meantime those three currency pairs will be weaker. Okay, so out of the US dollar pairs, the other one we need to look at is the yen pair. Okay, now the yen pair, looking at it on a big swing, I don't have a chart going back far enough, but this is a broad brush and a very big picture analysis. So we've got US dollar yen coming down from the top left, coming down like that. Then you see over here is we have wave A, and then this here is a triangle. You can see you can just about make it is a triangle. Let me just make a thicker line so you can see that a bit better. Triangle. Okay, so what that means is we've got wave A, B, C appears wave B, and this is wave C, and in the wave C we've got A, B and C as a falling wedge. And what that means now is all the movement to the downside for the time being is finished, and is finished back in 2008 where we had the low, 2011 where we had a low, and since then we've been moving up very strongly, and we've been looking at this and noticing how far it has moved, and you can see this area is a potential problem area, which is around 101 to 100 area, 98. Between 98, well, we've almost come to 98 or very close to it. So between 98 and 101 is a problem area, because we have basically this lot of support, broke below, but even in the process of breaking below, we temporarily just breached it mildly, try to come back up again, and we've now dropped down below that. So that area I expect it to be resistance area around 100, and it's also a round number, around 100. Okay, but what I'm also trying to point out is this has come down, a long way in the process of bottoming here. So now we are going to be having at least nothing else but A, B, C kind of a move to the upside, and we are currently forming a wave A, which is very impulsive part of wave 5-wave move to the wave A. So maybe overall we'll finish up this coming up here like this, for example, then coming back down wave B, and then going up again like that. So I would not be surprised if eventually we get yen, US dollar yen coming back to this sort of area here, around 125 or maybe even up to 140, 145. I would not be surprised. Okay, so be prepared for that. But going down to the shorter term, so that we are able to start looking for possible trades, this is where we are bottomed over here, which is back in 2011. And in a one day, this big one candle you see is a similar sort of thing we saw, but that was a massive candle. So it's wave one. That completes a wave one in my belief, wave one. And I've tried to say in double bracket to say so for much larger degree. Wave one in double bracket, wave two in double bracket. And since then, we've been in wave three in double bracket. But in the process of completing that wave three, we've got wave one in bracket, single bracket, wave two in single bracket, and we have just approached an area where we are going to be completing wave 3 in single bracket. Okay, so that will bring us into the area of around 100 area. So within that we've got 1, 2, this one 3, this one 4, and we are now working on wave 5. And in the wave 5, you can see here is we've got wave 1 from the low we had in 90.8. we have 1, 2, this is 3, this one 4, and we are now going in a fifth wave to the upside. And that fifth wave to the upside has still some way to go, because that one is also starting off with wave 1, wave 2, and soon will be coming to complete wave 3. So for example 3, 4 and 5, so this may be about to be completing, but I think it still has a little more upside left, because if you look at the RSI, then this RSI is suggesting wave 3 of this last piece here, wave 3 coming down for wave 4, and we'll be moving up for a wave 5. And in that wave 5 we have still some way to go. For example, here we've started off with look like 1, 2, so we've got basically this last leg will probably take us to an area where we just identified around 99 to 100 area. Okay, and we have several Fibonacci's lining up at the point where I'm expecting. So whilst it may be difficult to believe, as long as we remain above this trend line, make that one blue, and what that one is doing is connecting the low we had in 90 to 80 area, and then this spike low here on 30-minute chart or 1 hour chart. And as long as we remain within that uptrend, we are presently looking for wave 3 in single bracket to complete at around very close to 100. I think, to sort of keep the round number, but also it's an area where we know, we've just noted that we have a several degree of resistance, i.e. it's approximately 50% retracement of that entire decline we just looked at comes into that area. And we've got horizontally other structural resistance coming into that area as well. And we will see this one here on this weekly chart. By the time it finished the complete cycle, we will see a divergence, and that would then complete this effectively like wave 1 starting from here, wave 1, wave 2, wave 3, then small retracement wave 4, and then we'll go up for final wave 5. So final wave 5 will take us much higher, but this time around I'm expecting basically around 100 area, where the yen pair is looking to form a significant top. But in the meantime, I would not short that. I would expect further movement to the upside. Around 100 is an area where we would look to short or look for conclusion of the current uptrend. You can see here on RSI on daily is that we are currently in a downtrend. So the current movement of RSI, what will likely happen is I will see this like that, and there will be a secondary divergence forming also on that, which is when the wave 3 of this single bracket is likely to finish, and we then expect a much deeper retracement. And the retracement normally they say it comes back to previous wave 4 of the lower degree. So previous wave 4 of lower degree is around about 92, lower one is about 90. So 90 to 92 is probably where we are going to retrace to for wave 4 in single bracket, and then again continue to the upside. So don't be in a hurry to short US dollar yen. It's got a long way to go. Okay, so those are all the US dollar pairs. The only other two major ones is the pound and the euro. So with the pound, this is what I like to suggest, is that from the low back in 2009, my belief is that we have done wave A in this larger bracket. Okay, and in fact, if you just glance over the monthly chart, if you just look at the monthly chart, you see we have come from the top. Okay, I'm not sure exactly how, but we've come from the top left hand corner, and this is the lowest low. Okay, so if that is the lowest low up to here, then we have gone in ABC retracement. So we retrace some of that to here, then we are continuing down, and in that process we've got this one as a much larger wave A. Okay, so here I could possibly put this one in, say for example, based on my chart, I can put this one in wave A in bracket, and what we're going to be doing here is wave B in bracket, capital. Okay, so after this major ABC decline, we get ABC return, then we will see a final leg down to complete this correction. So in the meantime, if you're looking at this here on a weekly chart, we've got ABC up to give us capital wave A. Then I think what we've got is we have potentially this one as an A. So in fact this would be incorrect, so let me put that as a wave A in small a in single bracket. Okay, then my belief is that this one here is wave B, and the way I reached to that is we have single wave A in single bracket, then after that we've got A, B and C to complete this wave B, and then we have wave C down. So that would give us wave C in bracket, and consequently it would also complete capital wave B. Contrary to what others are saying, they are saying that this is the triangle and it's broken now, and therefore they're expecting, you know, dollar pound dollar to go back up to kiss underneath the line and then continue collapsing, and that's a possibility. But I think from what I'm looking at, it is not likely. Also, if you look at the RSI, you will see on the daily RSI is we are still in an uptrend. Sorry, weekly RSI, we are still in an uptrend from the low there to low here. Okay, but if you then drop down to look at daily, then you will note that this low corresponds with that low, and this RSI low here corresponds with this low, and there is, on a price you got a lower low, but on RSI we got a higher low. So I think that's the reason why there is a divergence on this daily chart on a big time frame, and so this coming down is a final wave to complete this wave C, and now we should be looking for a strong move to the upside, and I am looking for really strong move to the upside, almost to the point where it will do the following. If this was wave A and we do AB equals CD, then I'm expecting pound dollar eventually to come to somewhere about 175, 176, maybe even higher, i.e. 61.8% retracement of that, which will come to about 81, 86, so 82, 182 area, but definitely around 175, if my analysis is to hold. If we find that pound dollar comes to this trend line, struggles and falls back, then I'll be wrong. But my feeling is that we've had the completion, and based on the elite wave, this is the last leg down, and we are now in a new cycle wave up. And if we decide or understand that the dollar index is going to be in a 5-wave decline, then you can imagine this will be correspondingly going up in a 5-wave. That's how I'm interpreting this for pound dollar. So in a shorter term, pound I think is a buy, and you can see from the low recently created, we've got minor wave 1 with internal 5 waves, A, B and C down to create wave 2, and we are now in this wave 3, and you can see even within a wave 3 we've moved off very strongly. Okay, so I think all of this is suggesting to me that, you know, our intermediate target for this one is like 155, 156, 157 area as an intermediate target. We are currently just bumping against the upper trend line of this small trend channel. Once we break, I think we will have like double the width of that trend channel. We will be looking for 157 or so in due course. And when we look at the other chart, euro chart, you will see what I mean, because I think a lot of people have misinterpreted the weakness of a pound. It was weak because it was completing this last leg down, wave C, and you can see it's got a 5 waves. One starting off from there, pardon me, starting off from this wave 1, wave 2, wave 3, wave 4, and then very extended wave 5. And the common relationship is that if you do length of 1, 2 and 3, if you do the length of all of that and then apply it from wave 4, you'll get like in this particular case it is 127%, but sometimes you get 100%. Okay, but in this case it's 127%, but it is also 61.8% of this particular first leg up. 61.8%. Just make sure. Yeah, 61.8% of that leg. So that's another reason why it's leading me to believe that all that has happened is we've had this bounce up in a wave A, then all of this is very reluctant, very long, agonizing sideways correction of wave A, and we will be going up for wave C, and after that we will have finished a retracement of this down leg we noted earlier, and we'll be looking for pound dollar to then start moving to the downside. Okay, so time is clocking on. So let me now come to the other chart I wanted to share with you, which is Euro USD. And for Euro USD there are basically many what you call expectations of what the euro is going to do. Okay, what I'm going to show you is a larger, in fact let me just bring that chart up. Okay, so I'm going to show you very quickly monthly chart, and I think what is happening is this. From the low we've had A, B and C. So this is how I'm looking at it, and again many technical analysts are doing their own analysis and are coming up with some different scenarios, but I hope to show you very compelling case for considering another alternative. ABC. So that ABC I think gives me W, and then this one here becomes Y, and in that case this one here becomes WXY, and then I believe this is the wave X, and so what we're looking for is the wave Z. Now if you remember that we are expecting dollar index to decline in a 5 wave, okay, so with that understanding we are looking at this one here, and I think what we've got even on here is, and I'm doing this here now so you see exactly what I've done, okay, right. So what we've done is we've got wave W, it has A, B and C. Then we have a flat here which basically has wave A here, wave B there, and then wave C to the downside. So this one here is wave C. So I think this is what's going on, okay, this is what's going on. So A, B, C to give us W, A, B, C back to give us wave X. Then we've got A, B and C to give us Y, A, B and C to give us Y. So we are now in a form of wave X. So where is the wave X finishing? Okay, so again I'm going to show you this one here. This is on a monthly chart. You see, that's what I see. So you see triangle on the RSI, okay. So in order to confirm that triangle on the RSI, in fact, although at the moment it's looking like that, I suspect that is more like this, okay. The reason why is because we've got a potential triangle going here, and it's a funny kind of a triangle in the sense that everybody's drawing differently. Some are drawing it from here, some are drawing this one from like that, and they may all be very valid, but the way I'm going to draw this one basically is like this, is like that. And the reason for that is because we've got a triangle, it must have 3 swings, each of 3 swings, every swing will be 3 in other words. So here if you drop down to weekly, you would notice that the first swing down is A, B and C, okay. So that one gives us wave A. Then we got A, B and C back up. So really this one, to be technical, is even more like that, and I would cross it like this. So we got A, B, that has 3 legs in them. Then we got A, B, C down to give us a wave D. Then we have A, B, C going up to give us, I'm forgetting my alphabet, this one C, this one D, and then we've come down to form a wave E. So I think that's where I'm sticking my neck out and say that where I think actually this pattern concludes. And this leg down also has 3 waves. and you can see that three-way clearly on the weekly chart, because it come down from A, B and C. So that's W, X and Y. So the first part here, so this is how it is looking to me, is that we've got A, B and C. Okay, so this becomes A, that one becomes wave B, and then the other one becomes wave C. And the way that is explained is this here is a triangle. So we've got minor A, minor B and minor C to give us A, B and C to give us a larger wave A. A, B, C back to give us wave B, and then wave C, the 5 waves, 1, 2, 3, 4 and 5. So that's my reason for expecting triangle finishing here. And if that finishes there, then overall we've got like that. I'll make that one different color. So we've got that. And I think that's where it's finished. It's not exactly a triangle, but I think that's where we finish. We have a wave X there. And then if you look at the RSI, you see, ignore this one here, but look on the daily, you have a massive divergence between the price low and a lower low here. And then that would correspond with the dollar index declining, and then this one now actually climbing up like so. Okay, and we will and in that we have this one here as wave A, this one here as wave B, this one as a C, and my feeling is that here this one is we've got a connecting wave X. So I'll go into that detail on the other chart. Okay, so now we should get another ABC movement to the upside, because remember over here we had ABC to W, A, then we've got here ABC, so we should get ABC to give us the larger wave A, wave X, and we'll see another ABC to the upside. So from this July low, we've got A, B and C, so we'll be following this pattern here. We've got A, B and C with the February high, wave X, another ABC zigzag to the upside. And when you look at the wave coming down, again many people have tried to label that one pardon me, many people have tried to label that one as an impulsive leg down. But if you look at this, whilst it has nearly retraced almost all of this leg here, you can see that the price action of this one, with exception of few days, is quite different. It is very overlapping, and it is nothing like this one. This one clear swings. This one does not have that. So from the price action, I think this is more looking to me like a corrective price action. And in terms of labeling that, what I've done is you've got, without going into great detail, is basically you've got a swing called W, X, Y, X, Z, and that Z finished off where we had Thursday spike low. That's where we finished off, and we should now be in a strong uptrend, which will be impulsive 5 wave up, just like we had over here. Impulsive 5 wave up, I think, and that will be at least retesting this 137 February high, and probably continuing much higher than that. And the other reason for that expectation is on this chart. You will see that one is the RSI divergence with just current drop coming down, but on the day of the reversal, what happened was the price opened and it really dropped as Mr. Draghi was going through his press conference. In early part of that conference, the price euro really fell, but as it fell, it only just took out a stop below the previous low here, the previous low there, just took that out marginally. Okay, but on that particular day, look at the volume, and the point to note is that as the prices were coming down, for part of the time the volume rose. Then as it congested in that area, volume dropped off, and then as it started coming down, the volume rose again, and then toward the end, volume really dropped off. And then on the day of that spike low, we have a volume which is relatively high. It's probably as high as it's been, like, most of the time. So that's a relatively high volume, and the price then closed at the top end of that particular day's range. Gave back a little bit, but it was at the top end of that day's range. So my feeling is that that signifies a significant point of reversal. Just like earlier on in July, where we had a reversal over here, you see, look at the price on that day of reversal. The price or the volume is very high, which corresponds with a bullish bar to the upside, and that too had the same sort of situation. You had as it was falling, the price was rising, and then after that thing, price really spiked high, but the bar closed bullish, suggesting that probably was a climax. And I think same thing I'm noticing here. And based on the dollar index topping out, and this one now finishing the low here with the associated RSI divergence on the daily and the volume spike, my feeling is that that is a significant low, and we are going to be now going up in a new uptrend. I don't think this will simply just go on a retrace path, like many are saying that you go to left shoulder, a head, and the right shoulder, and then it's going to fall down. I don't think that's likely to happen, because normally a valid head and shoulder pattern is after a substantial move, like over here. The price came way down here, right, and then it formed a larger, what I think is going to be head and shoulder pattern, and we will be going to the upside. That is a valid head and shoulder. But if you're looking at price simply just going up there and coming back down, I mean, it's only risen that much. And look at, in relation to that, look at the massive head. It doesn't look proportional, whereas this one does. So my feeling are that, lining up with the dollar index bottoming, or topping rather, I think the euro has bottomed. Likewise, the pound dollar has also bottomed, and both of those pairs are going to continue higher. And on other occasions, I could probably go through a section that you might benefit from otherwise, but basically speaking, we've got Canadian dollar, euro, Canadian dollar, New Zealand dollar, and Aussie dollar. All three currencies are going to be the weaker group of the currencies, and then Swissy, pound, and euro are going to be relatively stronger group of the currencies, and the dollar and the yen will be in between. So in that context, you will be able to identify massive opportunities for long trade to the upside for euro pairs and pound pairs against Canadian, New Zealand, and Aussie dollar. So that is my current view, is that we are looking for euro to go, and eventually if we understand that this euro is forming an X wave and is going to do ABC to the upside, then eventually it should do what we just outlined on this one here, is that if we had if we had a situation where we have done this at the bottom and the X wave, then it's going to go all the way. And I have been saying for a long time that while there will be some resistance along the way, I think the euro has the potential to actually go all the way, retest the last high, or maybe even make a new high. So in the meantime, what will invalidate? Well, it will be invalidated just like the pound dollar we looked at, is if this one simply goes up part of the way and then falls off, then we know it's going to be invalidated. Okay, and also the fact that this came down as a very, not as an impulsive, but is a very corrective wave. And in contrast, we are seeing already a sign of a very bullish, very strong and clean uptrend. So I think that we have actually formed a bottom. We will not simply go and do A, B and C and then fall straight. That's not what I'm expecting. If we don't see that, and we see a lot of overlapping chopping area here, then we will have to reserve our judgment as to which way it's going to go. But I'm already looking at potentially you got minor left shoulder ahead after this decline, and I'm expecting some congestion in this area, but then basically then going up to form a right shoulder. So even on this 4-hourly chart, you should be able to see head and shoulder pattern to the upside. So that is all from me for the time being. Thank you, and hope that this has been interesting, educational, and will help you in preparing your own chart analysis and preparing your charts to plan your trades in the days and weeks to come, but with a bigger picture and a backdrop that the dollar index, I think, is in a major decline and will continue to do so until it reaches its target of minimum 70 to probably 68 or so, maybe even drop to 66, but 70 to 68 is a range where I reckon dollar index will fall, and during that time we will see everything US dollar measured currencies or assets will be reaching their respective high against the dollar. So I'll stop the recording here. Thank you very much. I'll be very happy to receive any comments or any suggestions or your feedback. For those of you who know me by email or by Skype, and those who don't, you're welcome to leave comments on the video.